This is Keith Shabby, your friend in the mortgage business. Today, talking to you about understanding credit and how credit affects your ability to actually qualify for a mortgage. In today's market and in today's world, when you're financing a home, credit scores are based on a point system that the mortgage industry and credit reporting companies look at in regards to qualifying you for a mortgage and the kind of mortgage you can get. There's many different types of credit reports you can get. You can get consumer credit reports, which is typically from different websites that you can get that are basically not as detailed as a lender's credit report. Secondary credit report would be an auto credit report that you'll typically get when you go to buy a vehicle. And then the kind of credit report that you want to be getting when you're dealing with financing or getting a mortgage is going to be actually a lender's credit report. Lender's credit report is actually a more detailed report breaking down your ability and willingness to be able to repay, gives us more detail in regards to how many inquiries are based on your credit report, if you've ever had any late payments, or if you've been in good payment history. And they grade it on a point system, and your point system is based on what you call a FICO score. The three major bureaus that are going to be reporting this point system are TransUnion, Equifax, and Experian, and the point system goes from a low of 350 to a high of 850. Now, the thing about the point system is it's based on the amount of credit that you've got, your payment history, your credit cards, installment loans, personal loans, student loans, car loans. Also, it also takes into consideration any late payments that you have. Now, in today's market, what lenders are looking at is they're looking at a point system, and the point system that they want to look at in order to qualify you for what are good rates are going to be about a 620 to a 640 credit score. Now, the truth is, when we grade our scores, I want you to think about this back from the elementary system when we were back in school. They graded on let's think of A through F, A being great, F being poor. When you look at points, 350 to a 500 credit score is going to be considered an F. I'm not saying that you're not going to be able to get a mortgage, but I'm just saying that what you've done prior to listening to this recording is going to need to be changed. And you need to look at something doing differently so you can get your scores increased. Then when you go from a 501 to a 580, you're going to be looking at what we consider a D. It's not nearly impossible to get a mortgage, but you're not going to be able to qualify for the excellent rates and programs that are available. Then you've got a 581 to a 640, which would be considered a C. This is about average now. And then as you start getting from a 641 to a 700, that's considered B. And then what lenders are really pushing for now in the U.S. government, they're trying to push to actually have 700 credit scores or above, which is considered excellent. And the truth is, in order to have scores like that, you need to be in a position to be able to know what your scores are, what your payment history is like, so that way you're able to qualify for a mortgage. So when you talk with a lender and you actually sit down with them, they're going to be able to tell you exactly what kind of mortgage program you're going to be able to get. This is Keith Shabbat. I want to thank you for your time today. Have a great day.